Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 4, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, other than the reversal day, we have a few more things on the docket, but we do have a bona fide reversal day in the SPY. We talk about these. They come out of nowhere, whether it's an intraday reversal, a gap and crap. We had a gap and crap today. There was a bona fide reversal day at the end of the day, and look where they went. Remember this trend line? And let me refresh everybody's memory, because when you go to the monthly chart, this is the March of 2000 high, and these numbers are spot on, dead on, balls accurate. And it goes through the highs of January 2022. And guess what? Here we are again. And when you look down at a daily chart, you can see here the market came right back to that spot, vacillated about that trend line by the end of the day. And if you technically look at it, closed slightly below the trend line. Now, obviously, they can pop up tomorrow in a dead cat bounce formation. The trend line, not whether we close a penny or two or 10 or 20 cents above or below it. The trend line is our guideline. What does that mean? That means that's where the market changes its complexion. So here's the other thing. What we do know is below the trend line, while there are some places that can bounce a tape, there's a gap, there's a moving average, we have a place. And the place was discussed before. We're going to bring it right back out and put it on the front burner. The place is 503.50. Sometimes they come up short. Other times they spike them through. 503.50 is a breakout area and a place that we talked about, whether it was a week or two or three ago, we talked about they'll be back to pay a visit come hell or high water to 503.50. Whether or not they bounce off it, how they get there and all that stuff is relevant. Will determine in real time. However, 503.50 is a target if they get below the trend line and they stay below the trend line. Peekaboo for a day doesn't do the trick. Sustained price below the trend line. And when you look at a weekly chart, you can see here, that's pretty important. It's an important trend line, and we are, and write this down, put it on a sticky note. If you don't already have it, you should already have it. Talked about it every day this week. Why? Because we're in an on-time type of situation from a monthly perspective. Talked about it last night, talked about it Tuesday, talked about it Monday, talked about it last week. What are we looking for in an on-time type of situation? We're looking for a top. We're looking for a sign and or signal of a trend change. Is that a signal of a trend change? And the answer is yes, it is. Doesn't mean 100% the market can't go back up. But the odds favor the fact that because we have a bona fide on volume reversal candle, if she gets below the breakout, the last breakout, which was the trend line, that's going to open the door for a leg lower to the next bona fide breakout area, support area, 503.50. Doesn't mean they have to get there, but it means the door is open. Now back to the weekly chart. Here's another important thing to watch for tomorrow. Tomorrow's the end of the week. By Friday's close, is she going to give up the last breakup candle low in the sequence? That low is 511.12. I would watch 511.12 tomorrow. Closes above it? Okay. Closes below it, and therefore also below the trend line, that's even more in the bearish camp. The month of April is an on-time month for a turn. What about inside the numbers? Well, this morning we had a gap higher open. We had a melt-up situation on our hands. So the market melted up throughout the morning session or the pre-market. So the stuff from 0 dark 30 doesn't really matter. But what we'll do is we'll take a look further out and see what's the scoop. 835. What am I thinking now? Headed to a resistance zone found between 521.90, 523.15. Well, let's use the upper portion at 523.15 because they did go higher. Only closing candles above. This is important. Only closing candles above 523.55 changes the scenario of overhead resistance where they should have a reaction back in the other direction. We think better in pictures. Right of the vertical is today's activity. Look at the opening print today. 523.52, an immediate pullback. Here's the point. Traders in the live room, short right out of the gate, took profit at the base hit. It doesn't look like anything from a trading perspective compared to this, but this was the afternoon. This was the morning. We're talking about the morning right now. It's all in here. What I urge you to do is pause the video, read the notes, go back to the charts, and double check the work. Now, if they were going to go higher, we have 424.60, then 524.60, then 525.25, and so on. We always have the numbers. The question is, what are they actually going to do? What I said to the live room today was, we have waning velocity. Now, what I said was it could last for a few hours, waning velocity. When you look at the hourly chart, I wasn't kidding. I didn't know this was going to happen. Waning velocity. They couldn't go any higher. Looked like they were going to start to build a bullish, flaggish kind of situation, build energy to move higher, and they just fell out of bed, and the game was on for the bear case. The afternoon trade is not the morning trade. They're two totally different markets. We had three stocks on the move today. We had Disney, Bristol Myers, and Alaska Air. Only one of them hit their entry objective, but not in the manner in which. Let me explain, Lucy. Let's take a look at Disney, too. Here's Bristol Myers. You can see here low of the morning session over here right around the open was 51.71 against my number, 51.70. There they got the bounce, 1 penny in front. So this number's then off the table. If you front ran it, fine. If you didn't, it's off the table. And this became a no trade later on. How about Disney? Remember this one? It's short from the Lazy Swing Trader Automagical Algo system, which also has 5 open short positions and 3 open long positions, 2 of which were already profited at first target, meaning we took the base hit, and therefore the rest is a risk-free, emotionless trade, meaning we're never going to let the rest go bad on us. So the stops are already at break even or better. So we only have 1 trade open that doesn't fit into that category. The rest are shorts. I like it. And what some of the members noted to me in the live room that are members of the Lazy Swing Trader, also of late, over the last several sessions, over and over again, the whole watch list has been loaded in shorts. They don't all go off, but it goes to tell you, it's really a hint of what's going on out there when the system is loading up on shorts, and it was loading up on longs back in October at the low. Before the low, it was all littered with longs, loading up on longs. That's telling you it's close to a turn, at least from my perspective. Maybe we'll get first profit target in Disney sooner than later. What's going on over in Camp IWM? Well, you got the same reversal he had in the spiders. In the S&P, the Dow, everything. It's all together. The NASDAQ. It's all the same market. On big moves, they're all going to trade together. And by the way, don't forget, markets like to trade down or up into tinfoil hat events. We still have a tinfoil hat event coming on the 8th. Don't rule out that could be a low area. We could get a bounce from there. There's another event coming about 2 weeks later, give or take. Market goes up, market goes down. Keep in mind, write this down. It's hard to kill a bull. That's a trader-ism. We know the number below in the IWM. It hasn't changed, 202.15. If they spike it, 200, big fat round number. 0.15 is the exact number. How does it come out? 0.15 twice in a row? I have no idea. There are no accidents nor coincidences in the market. That was the number from the Automagical calculator. Write it down, put it on a sticky note, IWM. Favorite market leading indicator. Second favorite market leading indicator, a number 1 canary in the coal mine, just gave up the daily chart convergence of 20 and 50 period moving average. We'll see what tomorrow brings. We're going to get a dead cat bounce. Was this a one-day wonder, or do we get follow through? The end of the week is very, very important right now. Friday's close will be very, very important. Do they run a rescue operation, or do they kill the tape into the weekend and they give a bona fide reversal in this market because that's what would happen if they ran it down into Friday and they closed the week with a reversal week, reversal day today, all that stuff. The writing is on the wall. On time month of April, on time type of situation. For what? A turn. Where have you heard that before? Qs down almost $7, 1.5%. Big down reversal candle on volume. Broke below, closed below the 50-period moving average today. Again, one day doesn't do anything, doesn't make a trend, doesn't tell you all the information. However, what tomorrow does, whether it's a rescue bounce back operation, dead cat bounce variety, or follow through the downside, is going to be very, very important. What we do know is one way or the other, there's likely to be plenty of opportunity tomorrow in the live room. I'll be there. Will you? In uniform, ready to go. XLF, no exception. Taken out behind the woodshed from a reversal perspective. Closed below the 20-period moving average on volume. These are hints. This is the way the market is telling you something. These are puzzle pieces helping you put together the picture that the little pieces of the puzzle make up when you put them together. About Smashmouth, making a bullish pattern, eating time off the clock from that low until they're not. All of a sudden, they're not doing that anymore. Here's a move up. Here's the bullish flaggish thing we've been talking about. Started up today, and all of a sudden, you got a reversal. Unless you reverse the reversal, this is a reversal. It's telling you something. All the markets are telling you something unless it's one big, fat, fake-out operation. Tomorrow's going to be really, really important. Want to see the close tomorrow. Depending on what they do, may warrant a Friday night or weekend video based on whether they have follow-through, where they close them. We'll make the assessment. If they run into a Friday floater, no dice. This is everything I really wanted to cover. We got the reversal we're looking for. Now we need the next phase. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.